Wednesday, April 22nd, and we are 2.5 hours into trading. The market's doing a whole lot of nothing. Let's see what we've got on the 5 minute chart. You can see this is the opening gap from yesterday. The market sold off, established the low, and we didn't get anything. Just a tiny little bounce in the last hour of trading, which I had mentioned in yesterday's video. I said this is a bearish trend day. Don't expect any kind of upward bounces that gain momentum. This is a bearish trend day. We closed pretty much on the low of the day. This morning, we had a gap higher. There was news that the government approved the stimulus bill, an additional tranche for small businesses that was largely expected. And we got this gap higher, and we stalled out at the prior day's high. You can see how we've been struggling the entire day. So, what's my read on the market today? Well, there are a couple of positive developments today. This opening gap higher largely held, meaning that if sellers were aggressive, they could have come in and they could have spanked it down, perhaps even testing the low from yesterday. They were not able to. We stayed right within striking distance of that high from yesterday, and we've continued to go up and challenge it a few times here. So with each challenge, we're likely to get through. You can also see my 1OP indicator has been declining. We'd like to see a nice big trough like this and a cross. If we get that, then there's a good chance we'll see the breakout. As it stands right now, this is actually a bullish divergence that's setting up with this indicator moving lower and the market compressing. So as soon as we bottom out, we should see at least an attempt into the gap. I think there's a good chance that we try and fill some of this during the course of the day. So, as far as the downside and what would get me bearish, if we had a big spike in this indicator and we were able to breach this upward sloping trend line on a 5 minute basis, then I think we probably would have a chance to roll over, maybe test that low of the day. But buyers have been engaged. They've been supporting the market all day long. It's been able to hold those gains. So I think that's going to continue into the close. That stimulus package is probably going to get through the house. So we should see a nice rally. Uh, anyway, let's take a look and see what we've got on the long side. Let's take a very quick look at the D1 chart on the SPY because there is something that I'd like to mention. We have seen a lot of dojis in here. That means price equilibrium. The upward momentum is starting to stall out. You can see how the drop yesterday pretty much erased the gains from the prior two weeks or so. So there's no market momentum. I don't see any big catalysts. I believe that asset managers bought from this overextended low on the notion that the coronavirus was going to peak and that conditions were going to improve. Well, we've got that news. That's happening right now. But there is a huge path of destruction that lies in its path. And we're going to have to spend a lot of time recovering from this. We don't know if the stimulus plans are enough. We don't know if businesses are going to reopen right away. We don't know if states are going to reopen right away. There are three of them that are trying, but there are other states that are extending the lockdown. Every week they extend it, the recovery becomes exponentially more difficult. So I think it's a wait and see mode. And I personally believe that there are going to be a lot of issues across most sectors. The two that are not really impacted as much are technology and healthcare. Those two sectors have been doing very well, but almost all of the rest have really been struggling. The front end of earnings season is loaded with mega cap tech stocks, and sellers tend to be relatively passive ahead of Google, Facebook, uh, Twitter, which in fact yesterday we had Snapchat released earnings, excellent earnings. Everybody was using Snapchat a lot during the lockdown, so that bodes well for Twitter and Facebook and Google. I think Amazon's going to have really strong earnings. Microsoft has done super well with gaming and with their cloud technology. Microsoft should do well. I think the odd man out is Apple. And that Apple call spread that we sold last Friday is doing great. Netflix reported earnings yesterday, so we're seeing that a lot of people that are staying home are signing up for Netflix. So those are the types of stocks that are doing real well, and those tend to be the mega cap tech stocks. As I was mentioning, as soon as we get those earnings, I think the air gets let out of the balloon and we start to see the market come in. Industrials, financials, retail, energy, all of those sectors are going to be hit really, really hard. And it's going to take many months for this recovery. So, how much higher do we get? 288 on the SPY was my first target. That's the 100 week moving average. We could possibly get up to 300, but I'm not seeing it with this type of resistance that we're already hitting right here. I don't know what will be the catalyst to get up there. We had all the stimulus that you could possibly throw at the economy has been thrown at it right now. It's a wait and see mode. So this puts me in a position where I am fairly neutral and I've actually got a slightly bearish bias right now. So in the weekly swing trading video that I'm going to be recording tonight, I'm going to have a mix of bearish call spreads and bullish put spreads, probably weighted toward the bearish call spread side. I think this rally is a little bit optimistic. We've hit that 50% retracement. So if you calculate the midpoint between the high and the low, we're right at about that 50% mark. So I think the trading is going to be relatively lackluster while everyone tries to figure out how the recovery is going to go. So let's see if we can find some trades, and I'll show you how easy that is to do. I'm always going to set you up with a really good trade. And first, we're going to take a look at the one that I told you yesterday. That was Disney. Excuse me. Disney is actually a short that we took a few days ago. We sold an out of the money bearish call spread. So let's take a look at that. We were selling it above this 108 level. So you can see how the stock has been coming in. That's been a very nice spread for us. But KO is what I actually referenced yesterday. And so let's take a look at that. Beautiful. Look, we're still within the range from yesterday after we had a huge gap higher on the S&P this morning. This stock is going nowhere. And we were looking to sell that out of the money, bearish call spread, and we're looking to leverage right here, this resistance point, selling the $50 calls and buying the $51 calls for a 20-cent credit. So if you shorted Coca-Cola and you freaked out when you saw the S&P futures way up this morning, yes, the stock is probably a little bit against us. Well, we're probably short right in here is about where the video came out yesterday. So pretty much break even point, which is not bad considering that we had a huge market move against us. That tells you that we're in the right stock. Relative weakness. So Coca-Cola doing pretty well. Hey, do you remember that stock that I showed you Sunday night when I posted that video? J&J. I had mentioned to you that on a daily basis, I absolutely love the stock. It had earnings right in here. It's able to hold the gains. We were leveraging that 100-day moving average. Look at that stock power higher. So that's a really nice play. We weren't able to get that done Monday morning because the stock never pulled back. But if you simply went out and bought it, you're doing well on it. So let's go in and take a look at some stocks that we have setting up today. Very, very easy to find. And I'm going to go into the after earnings search. This was right on the list, right out of the gate this morning. And SNAP Snapchat is doing great. So easy to find these. And I had suggested to members that they sell the April 24th, they expire in 2 days, 15 puts, and to buy the 1450 puts, and that is the trade of today. I'm going to click on the bid here. I'm going to click on the ask there. You can see that spread is currently 11 cents bid, 10 cents bid, offered at 14 cents. That is better than a 25% return if this spread expires worthless in 2 days. And I like the trade. I think this is a good one. It's a very, very quick trade. You don't make 25+% in a few days without taking some risk. So know that there's some risk involved in this position. What I'd be looking for And the way that this trade sets up well is if the market is able to stay in the range, kind of maintain this price level. What we don't want is we don't want a new low of the day. If that happens, it's going to put some selling pressure on Snap. Our first goal is to get through the trading day. We get through the trading day, time premium decay kicks in, and that probability of success gets higher and higher. If the market does as I suspect and it grinds a little bit higher and starts to fill in some of this gap, that will allow Snap to continue to grind higher, and we will have plenty of distance between now and expiration. We've got a point of cushion in this trade right now. So that's the trade that I like. Let's see what else we can find. I'm going to focus a little bit on some of the swing trading searches that I have, and we'll see what's coming up there. I know we're going to find some really nice candidates. SMG, that is Chipotle. You can see they announced earnings after the close yesterday. The 100 and 200 day moving average held. The stock is surging higher. Uh, like selling a out of the money bullish put spread below this $800 level. I think that's a good trade. I would stay below these major MAs. So you probably need to go down to the 790 level. So a 790, 785 bullish put spread works. PINS, I like it if it can get above this 100-day moving average and close above the 100-day moving average. So you may be seeing me do a bullish put spread on that in coming days. Going to continue to go down. Take a look what we've got here. Shack. I'm not big on restaurant stocks, okay? I think that they're going to have a really, really tough time recovering, but Shack did secure some financing, so that's really good news for it. You've got a double bottom low. You have a breakout through horizontal resistance right in here. So Shack actually does look good technically. And see what else we've got. Facebook's going to be announcing earnings pretty soon, but it's getting some follow through off of that Snapchat earnings announcement. And let's take a look and see what else we've got in here. I don't see anything else that really grabs my attention, but I do like PINS. That's one you'll want to take note of. CMG also looks good. And FTCH, not so hot on that. Just it's run awful far right here. So it's gone from $6.50 to $12.50. It's doubled in price. So I think it gets a little bit toppy up in here with this major resistance level. So when I can, I'll try and explain why I don't like something. Going to go into the strong after earnings search because this is gold, gold, gold for us in the next 2 or 3 weeks. This is where I like to come in. I like to take it stock, look at stocks once they've reported. I like to see how they fared. I like to see a little bit better price action out of this one, but I would have been selling below that 200-day moving average if I had seen some follow through there. So I didn't like that one too much. Don't like that. Love J&J. UNH, that's had a strong head of steam. And last week I highlighted this one. After the earnings announcement, I mentioned selling the bullish put spread below the 100-day moving average. Really nice trade there. Love, love, love Abbott. Man, if the market pulls back and I get any kind of chance to sell this $90 bullish put spread, I'm all over it. TSM, nothing really to write home about there. Let's take a look at week after earnings because I am going to be looking for stocks that I can sell some out of the money bearish call spreads on. Initially, the easy thing to do is to just go through and look for whatever's down today. And you can see a lot of negative price action on CIT. That's probably a good bearish call spread selling above that $24 price level right in here. Use that horizontal resistance to lean on. So I like that. PACW, nothing too exciting going on there. A lot of the rest are bank stocks. We're just now starting to kick into high gear on earnings season. So this list is going to grow dramatically over the course of the next week to 2 weeks. This is going to be our bread and butter search that we go to. So because I'm bullish, let's see what else we can find. We'll go in and take a look at maybe relative strength 30. You can see the market right here in the right corner. It's going to challenge that gap again a little bit here. And let's see if we can find anything else. PayPal, I traded this morning. Really, really nice price action off of this major moving average. You can see that they announced earnings on 5/6. So we've got a couple of option expirations that we can use on this one. So we click on trade. We're going to go to the May 1 expiration date, and we're going to see if we can get any decent premium on that. And we got to go below the major moving averages, so that 107 price level will kind of do us. We want to make sure that these spreads expire before the earnings announcement. So in this case, I like being below that 108 price level where the 200-day moving average is. You can see it's at 107.75. Very easy on the option chain. See the pink line here? That's the 200-day moving average. See the red dotted line? That's the one standard deviation move. So for credit spreaders, we'd like to be below both of them. That increases our probability of success. Plus, we have nice upward momentum in the stock. That also increases our probability of success. Plus, we have nice upward momentum in the market. So we've got a lot of things working in our favor. You can see that the spread is currently trading 6 cents bid, offered at 21 cents. Now, if I do a 1 point spread between the strike prices, I like to get a 20-cent credit. We're going to need to have a little bit of a pullback in PYPL. I actually would take a 15-cent credit on this. That's going to represent somewhere in the neighborhood of maybe a 18% return on this trade. I think that's fine given that we're only in it for another week and a half. So that's another spread that you'll want to consider. PayPal selling the May 1 107 puts, buying the 106 puts, doing that for a 15-cent credit. You have a chance to maybe get it done in here, but you're going to need a tiny little pullback in the stock to get it done. Those are the picks for today. If you like this content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss one of these videos. I promise you, I'll have a new trade in it every day. Thank you. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.